Hi, this is Zach here with the Bulletin Board Heroes, the weekend edition here at Zach's Traders Cafe for Sunday, the 9th of March, the other charting video of the day. And starting off with the FTSE 100, where you can see that we're trying to cling on to that uptrend line there from back in January. 86.80 the level there, and closed a fraction below. It also closed a fraction below RSI 50, but I suppose there was a margin of error there. Looking for this market to at least bounce and continue to bounce above 8600, the old initial January resistance, and if the worst comes to the worst, maybe a test of the 50-day line there, 85.45, but ideally we bounce from Friday and head back up towards the record level, the 89.10 level, and then head up towards 9050, which is the top of the overall trend channel there from the end of 2023. Moving along to the DAX, and here you can see that we've continued to be in the, towards the top of that rising trend channel from November. We've hit the top of the channel there twice, the last time around 23,400 or just below that, and hoping that support will at least be maintained above 22,300. Recent support and the floor of that gap there from early last month. Worst case is that we've got to test 22,000, the floor of the channel, but let's see if we can get away with something better than that. The Dow has been the weak link, and they're largely due to President Trump shooting himself in the foot over tariffs and getting himself into a bit of a twist there, but we've got the 200-day line there, 41,800. That ties in with the 2025 support area, and it'd be surprising, I suppose, if we have to go to new lows after the great start that we made. If we want to get back on track fully, then it really needs to see this market back above 43,000, back inside that channel there from the this time last year, and then that would then hopefully point to 44,000. Moving along to the situation at Bitcoin, which has been extremely volatile, where obviously everyone was expecting the strategic crypto fund or reserve from the US, and that caused a spike at the beginning of the month. Since then, it looks as though it's slightly better to have traveled than to arrive. The rising trend channel there based at 80,500, so that's the place that people are keen on crypto, or at least Bitcoin would have a sort of a toe in the water, and hopefully hoping for a better support level than the 78,000 that we had right at the end of February. To get back in the good zone, really, we want to see this market back above 90,000, but it looks as though, at least in the next week, we've got to be testing for support towards 80,000. Moving along to the situation at gold, and here we can see that we are staying above the old neckline support, 28.80 roughly, and above that, looking for the top of the channel there by the end of this month at 30.20. That channel there from February last year. RSI remaining above neutral 50, which is helpful. Moving along to the stocks, and some of them influenced by Lord Lee's boasting of being the first ISA millionaire. So this is one of his stocks, Anpario. I'm only showing the good ones, not the bad ones at the moment, but rising trend channel here, and the top of the channel there up to £5.60. We're looking for that over the next 2 to 3 months while we remain above the floor of the channel there. £4.10. Moving along to one of the stocks where we're hoping that this is the big turning point for the company. Funding news and tin processing plants and all that sort of stuff going on at the moment. Unfilled gap off the lows, basically. So it's a bear trap gap reversal, one of our favorite signals, and bullish divergence as well from a November uptrend line. So looking for at least 3.25 pence here while we're above the breakout line at 2.3 pence. And it looks as though this time, after many false dawns, we will get a proper turnaround. Next level, if you're a fan of the shares, above 3.25 pence, looking for 4.7 pence. Again, we'll probably be looking for that during April rather than March. Next up is Arc Minerals, which I know a lot of people follow and like. Unfortunately, the shares have not really delivered on that faith and goodwill so far, but nice turnaround this week, and strong end of week close above a sharply rising 50-day moving average, and also above the RSI 50 level. So there might be a bit of follow on here up to 1.8 pence. Last month's resistance, best case, would be up to 2.5 pence by the end of next month, while we're above the price channel floor from last summer at 1.35 pence. Moving on to another situation where it may have been better to travel rather than arrive, and that's Amaroq. Stellar run there from September, where we basically more than doubled. Slightly surprising now that we pulled back. But got a couple of support points there. The first one would be the old March 2024 peak around 83 pence. So maybe if you could wait for that. That was also the peak back in November. And the worst case would be that we would have to test the floor of that rising trend channel from last year. That's roughly now level with the 200-day line at 80 pence. So one would have thought that any dip towards that 80 pence zone would be welcomed by the bulls with both hands. Moving along to another one of Lord Lee's favourites, and look at this Concurrent, beautiful move since the beginning of last year. Extended rising trend channel there, and basically looking for the top of that channel over the next couple of months as high as £2.05, while we remain above the price channel floor at £1.60. You can see that a nice unfilled gap to the upside to start January through resistance, and that tends to be a sign of ongoing very strong momentum. Moving along to a situation which is was requested and is possibly not quite as exciting as the last one. The only positive, I suppose, the main positive that one can say about CMO Group is that we are in deeply oversold territory. So RSI basically at zero, and you can see that the share's making some attempt to actually turn around. What we'd like to see here is that the shares basically stay within the channel I'm just about to draw at the moment, or just drawing at the moment. So falling trend channel there, and head towards filling that gap up to 4 pence, while we remain above recent support there at around 1.1 pence, above 1.1. Looking for at least a partial fill of that gap, maybe 2.5, 3 pence, something like that. Best case is obviously 4 pence and hitting the top of that falling trend channel. But you can see the RSI there, even after the latest slight bounce, is only at 9 out of 100, which is about, it was extremely oversold. And as I said, you're getting some positive interest there, the candles getting a bit more blue. Moving along to one of the best stocks of the recent past in the small cap area. This is Guardian Metal, and here, surprisingly, Lord Lee not apparently a holder, but he should be. Rising trend channel there from February last year. Floor of the channel there at 30 pence. Above that, we're looking rather simply for 47 pence. Interesting that the shares have achieved the massive rally up 200% last year, even without the main apparent trigger for the company, which would be government grants or non-dilutive grants for the strategic metals that it is sitting on. InsigAI, one of those stocks which is probably too complicated for most people, but we've got in terms of the fundamentals. But here we've got rising trend channel there, the initial target there up to 25 pence, while we remain above the rising 200-day line there at 14 pence, the 200 and the 50 lines. 50-day lines both rising, so that it tends to be a very strong signal, and it does allow us to dream even of as high as 32 pence in the upper parallel of that red resistance line over a 2 to 3 month period. The key here is that we go up and stay up from the latest push to the upside, which you can see has lots of blue candles in there, lots of days where we've opened at the low, closed at the high, which tends to be a decent leading indicator on the upside. Moving on to Helium 1, which is trying to revitalize itself at the moment. What's interesting here is that we had a gap through a now rising 50-day line. This counts as a sideways shuffle above a rising 50-day line, also an RSI rebound above neutral 50. So this should actually, fundraisers permitting, be able to head up to not only the top of the range around 1.25, but actually up to 1.6 pence by the end of next month, if the that gap remains unfilled, which it looks as though it could very well do. Moving on to Kodal, which has been on the back foot for a while, but had a good end to the week. Rising trend channel base there from September, top of the channel there, 0.52. Looking for that perhaps as soon as the end of this month on the basis of the strong end of the week again. You can see those hammer candles there, and then, which tends to be people trying to sell, and then the price pushing up after they've tried to get out, and then also the proper buying with the opening at the low, closing at the high situation on that stock. We've also got the 50-day line rising as well, which should be a positive as far as the price action is concerned. On to lap of honour here for Metals One. Well, this is lap of honour for myself, actually, given that it's called higher around the 0.2 pence level. The initial target then, which seemed to be almost ridiculous, was around 0.4, which would be to fill the gap that we had down from January. Best case scenario at that point was then 0.67, which looked to be pie in the sky, and now we're even more pie in the sky with the potential target towards 1.5 pence, while the shares remain above resistance on the way down, probably one would say around the 0.8 pence. If you're lucky, or we're lucky, then it would be 0.9. But what's interesting here is that we're waiting for the 200-day line to rise. If that does, then it looks we would be in a golden cross, and that would accelerate the move. You can also see there's a May gap there to fill at 1.3, which the shares had a chance or an attempt at doing on Friday. One of the best things at the moment is are stocks rising on no news, given that we're in certainly in a liquidity crunch in a bear market, and therefore who would buy stocks without any news, just out of the blue. We've already had the strong candle there for Phoenix on the 3rd of March, opening at the low, closing at the high, and we stayed at the highs of that close, stayed near that close level, and then had further strong candles. So one would be looking for 8 pence at the top of that broadening triangle there, hopefully by the end of this month, while we remain above the broken falling wedge there at 3.5 pence, which hopefully we can do. Another requested stock, which doesn't look so good, is RC365, but we are covering it on the basis that, or at least looking at it on the basis that we've got a rising trend channel base, and the shares will remain on the right side of a penny. If they do, the first target here is the 50-day line, 1.63 pence, and that would be the setup, especially, which looks all the more interesting after that sideways move near the lows and then the push higher on Thursday. So first green shoots there. Finishing off with Upland, and here you can see a reasonable end of week close there, with the shares closing above the 200-day line there at 1.55, and also with a decent close in terms of opening at the low, closing at the high. So that is a strong candle, strong end of the week. Does suggest we'll have another crack at the previous second target up to 2.2 pence by the end of this month, while we remain above the 1.5 pence zone, which has obviously become the new support area. RSI rebound at neutral 50 as well, helping the cause. That's it for me today. More updates during the week.